Today, basically, we wanted to talk about financing options for real estate investing and purchasing home.
So single-family rental homes can be very lucrative for a lot of people. What stops a lot of people is financing. We're not lenders. We're not trying to be lenders. We are real estate agents, so we see things on the other end of it and see what's worked. So we're going to stop with traditional. We'll talk about what we know about these things so you can kind of see, and we're happy to connect you with people that we know who do all of these things.
Exactly. Therefore, as my wife said, what is stopping many people to really invest in real estate is the financing, because not always everybody has the cash to purchase a property with the cash. And definitely you need the source of money, and there are different ways to get that money. But the first thing that we wanted to really start
loans, mortgages.
is the mortgages, no? And it's traditional mortgage loans. What is about the traditional
Okay, so this
mortgage
can
loans?
be, there's a lot of traditional mortgages. This is going to be your conventional loans. It's going to vary based on products, 15 to 30-year terms. There's a down payment. If it's a strict investment property, they're typically going to want 20% down. Maybe you're not buying it. Maybe you are buying it to live in it, and that's a different situation. But for instance, you are going to understand coming into this knowing that it's going to be, if I'm buying a $250,000 home, 20% is going to be $50,000, and the 80% is $200,000. So this is just a basic math of what they're looking for. And yes, in investing purposes, they do want 20%. When we're talking about your own home, this is going to be slightly different. If you're going to live in it, you can do less. You can also finance on different terms as well. But we're talking about commercial this one because you're going to rent this out.
And before do the next item, we're going to do our introduction.
Let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
Now, after we talk about the conventional, really...
Well, with conventional, there's two parts of it.
Two parts of it. First one is the fixed rate mortgages. No, what are those fixed rate mortgages?
This is gonna stay the same for 30 years of the mortgage. So you can budget for 30 years. You're intending to hold on to this property for 30 years. You're intending to hold on for the 27.5% depreciation value. You're intending to do that. So with a fixed rate a little bit more, or you just want to have a steady income or a steady budget. The other one is what?
The other one is ARM or adjustable rate mortgages. That this one really, in some scenario, is good and potentially could lead to saving early on, but also comes with the risk of the increasing depend on the market and also inflation and many factors that might affect the mortgage interest rate.
Now, with the ones we're going to talk about really quickly, this is for investment, but there's a lot of investors out there. Hey, I've met them. They're moving in life and they know that their life isn't stable yet. So they buy a house to live in it because they're going to stay here for 1, 2, 3, 4 years. And then they're going to keep it and then rent it out after they leave. So there is many people out there who will do this. It's investor occupied. So you're buying it to live in it. And that is when you can use the government-backed loans, which are FHA, VA, USDA.
Exactly. Now, off of this government-backed loan, do you want to talk about FHA?
No, I did that because those are detailed. I want us to talk about portfolio and bank statement loans.
Exactly. Therefore, now we wanted to focus on the portfolio lenders. And what are they?
These are your bank statement loans typically, and this is the most common type of loan we see for investment purposes, the DSCR. I couldn't get my letters. I know. I see it all the time. Typically, interest rate is going to be a little higher. It's based on your cash, based on your portfolio, based on your bank statements. They are going to be more flexible with things because it doesn't have to follow the government rules. It might be 25 years. It can be 30 years. It's going to be the first 3 years you cannot pay anything off. It could be lots of things, but these are typically what are they offering for people who are really looking at investments. And these are the most common type of ones I see people doing.
Exactly. For example, a local bank might give you 25 years of the portfolio with a 5 years balloon payment, which needs you to pay the remainder of the balance, for refinancing
that's a balloon
the
mortgage.
loan. Yeah.
That's important.
But I saw with my client that they had the bank with the local banks that they had the 5 years balloon mortgage.
Okay,
with
well, I
that
mean, that's
to
an
pay off.
option you have. I've also seen it as a very fixed income. So I've seen it with fixed as well. So it doesn't have to be adjustable. It can be fixed with these DHCR loans.
Exactly.
Next one we're
Then
going to talk about are ones that we don't see so much.
hard money lenders.
We get a lot of people who ask us about these people. They say, oh, hard money, da-da-da, that's what I heard about. That's, well, can I get this? And they typically will say that these go quickly if you have them. You can refinance with other mortgages later. But these hard money lenders, they do exist 100%. But these are going to be someone that's based on your assets, and they're a little bit more in hard. That's why they're hard money. They're not the DHCR lenders. They're not banks. These are hard money lenders. These are people giving you cash to buy a home. So there's a reason why they're doing that, because they expect higher rates of return.
And as a result, your closing cost is going to be higher. But also many people, they use those monies for the flip houses as an investment in real estate. And this way they can, when they finish right away, they pay high interest rate in the beginning. But when the second that they finish and they can put the house in the market for sale, they can basically disconnect this loan, because most of the loan you need at least to own the property for 6 months. And that might not be desirable for many people. Next thing that we wanted to talk about really is a private money lenders.
Right. This is also people say, I'm going to give you money. Groups are going to give you money to buy a place in exchange for a specific return on a favor.
Okay.
So again, it's going to be negotiated between the lender and the private lender. So maybe it's someone in the family who's agreeing to help you out with buying your rental property. It happens all the time as well. So understand that this is an option that people use. Another most common one is what? What's the next one?
Is the most common?
Yeah, no, I would say DSCR is most common. And then
Okay.
what's the question? This is what I said incorrectly. It's not the most common. It's the most commonly asked for.
The most commonly asked for, exactly. And it's rare to happen, but it's some situation happens, and that is a seller financing. No, and then when this property seller really act as the lender and allowing the buyer to make the payment to him directly under the agreed terms. No.
So here's what a lot of investors, or at least all my scam calls that I get for every listing, hey, are they willing to do seller financing? The reason they're asking, are they willing to do seller financing, is that they want the seller to take all the risk and them to get the award. So what they're going to do is this. They're going to say, hey, we're going to offer you $200,000, 20% down, and then you're going to finance the other 180, and just making up numbers, at a 7% for this amount of time for us to pay it off, if that's okay with you. And then what they do is then they turn around and they put that home right for rent. So they're not actually, they're paying down the loan, but they're not actually going to live in this house. They're going to try to use it. And then if the renters destroy the house, they're going to walk away and then just leave their money on the table. And the seller who financed the deal is going to get stuck with the bag of a destroyed house. They're getting their house back, but they're getting it in a much worse condition than they had it to begin with, which is why a lot of sellers will not do seller financing, though a lot of lenders love to talk, a lot of investors like to ask about it. So there's two sides to this scenario. So I would say if you're looking to be a serious investor, people do this all the time. If you can find it, I do not have a lot of things in my MLS that offer seller financing for this situation, but I will say it is an option.
Exactly. The next one that also you might heard a lot is the HELOC, or home equity loans and lines of the credit. What is that?
Right, so if your home that you're living in has a significant amount of equity, you can take that money to finance a rental property. So if your primary residence already has $300,000 in equity, you can take that home. You can borrow 80% of it, so that's going to be $240 typically, minus whatever you owe. So you can take that money and say, I just said $300 in equity. So you can take the $240,000 and buy something that is going to be rental investment income. So this is a very common one I see as well.
Exactly. And
the last one.
The last one is real estate crowdfunding and syndication.
Right, so this is newer. Modern the internet, modern investments, crowdfunding, Amazon. These platforms allow people to pool their money together to buy real estate investments, lower the entry point. I can honestly go onto Amazon's website for $100 and join in on one of these ventures. You contribute money towards a pool for investment purposes. So there's a lot of people who are looking to do these because they're being more hands off. So Anyway,
Therefore, basically, what we did here, we provide you information to strategically plan and control your finances for investing in real estate. And don't forget to call us, Alan Victoria, at 252-327-3357, and look at these videos, and see you next podcast and video.